Good afternoon. I, Dr. Deepak Thorawala, Vice President, FFPI. Welcome all of you to this FFPI and Finovate Financial Fridays. You must be aware that since last many Fridays, we are organizing online webinar on tax planning and different financial strategies for our FFPI members. So, in continuation with this series, today we are fortunate enough to have Mr. Chinmay Kelkar. I will introduce later. So our aim is to minimize the tax burden and maximize the profit within available tax law. Various diversification of income and understanding of provision of presumptive taxation to our members. I also welcome Dr. Vibhakar from Mumbai. He is one of our moderator. Welcome, sir. So, our today's speaker is CA Chinmay Kelkar. He is having a vast experience of 18 years in his field, and he is from Pune. He is also partner at KPCA and Company, and he has expertise and specialization in helping doctors structure their business entities and in the way which saves maximum taxes. Also, we have Ms. Nehal Mota. She is co-founder at Finovate. On 7 June, she has talked on this financial webinar. So first, what we will do, I will request Ms. Nehal to summarize last webinar in 5 minutes, 10 minutes to our audience. And then I invite Mr. Chinmay for their presentation. Please, yeah.
Yeah. Good evening to everyone. And thank you so much, Dr. Deepak, for the wonderful introduction and welcome to everyone. So I'll just take a few minutes to summarize that last session we discussed about the basics or the foundation of personal finance. And we spoke that there are 6 pillars in personal finance. We discussed the first pillar being understanding of financial goals. And that day we spent considerable time in understanding financial goals, how to, do the FIRE calculation. So financial independence and to retire early, what is a FIRE number? How did we arrive at that FIRE number? Apart from just, details about the FIRE number, we also discuss about having clarity of different financial goals. Okay, so the first session, we really discussed about laying the foundation of personal finance. So going back to the 6 pillars, Chintan, if you can just go to the slide of 6 pillars, the slide number 10. So the first session, entire focus was on goal planning, okay, and understanding the FIRE number. Now today we are moving to the second pillar, which is budgeting and taxation. And we will begin with taxation because if we plan our taxes well, it impacts the cash flow. If we reduce the tax liability, it increases the cash flow. And once the cash flow increases, we can budget better and save better. So without taking too much of time, I'll invite CA Chinmay Kelkar, who has deep expertise in understanding that how a doctor should be structuring his overall practice in different heads, which will in turn lead him to bring down the tax liability. Once the tax liability is down, it will impact cash flows, budgeting, and overall the financial fitness for a doctor's family. So all over to you, Mr. Chinmay, and welcome. And I guess you can take the very important topic on how a doctor's family can really restructure their income in such a way that they are filing higher returns but still not paying higher taxes with smart restructuring. So all over to you, Chinmay.
Thank you very much. So I'll start the presentation. Let me share it first. So is it visible now for everyone?
Yeah, you are not seen in the camera.
Acha. Okay, first we'll go through the presentation.
Sure. Okay.
Otherwise,
Yeah,
Yes.
now
now is
perfect,
it
sir.
okay?
Yes.
Yes. Yes.
Yeah. Now tax planning and business structuring for doctors. Basically, doctors needs to understand that practice is not a consulting but business as well, and how they can take advantage of certain provisions of income tax. So income tax have three main provisions: 44 AD, 44 ADA, and you must be knowing about 44 AB. So these provisions are presumptive taxation provisions, which speaks about you can show the expenses without having any kind of proof of the same. And with the help of all this, how you can minimize tax burden and how you can maximize the profitability or how you can maximize the cash flow which you are getting from your business or profession. Third thing is to understand by creating multiple entities, how you can diversify your practice, or if any small hospital is there, how you can bifurcate total hospital income into 3 or 4 entities, which will give you more cash flow. So next is what is profession and what is business. For a doctor who is running a hospital, consultancy service fees or procedure fees or research grant and royalty fees or teaching fees, these comes under profession. For profession, income tax have got certain provisions for it, and for business, there are certain provisions which are applicable. So, some business income which is earned by the doctors are diagnostic services, ancillary services, medicine sale, and hospital operating revenue. So, which means running a hospital is nowhere a profession for a doctor. Running a hospital is a business, and nowadays doctor runs it as a business, but they need to show in income tax that running a hospital is a business and doing a practice, for example, a OPD is a kind of profession which they can show separately from their business income. So these are the income tax department views. Income tax does not recognize the person, it only recognizes the PAN. This implies that a person can open several entities with different PANs. Having a number of entities reduce risk of assessment. Tax liability can be reduced by a person operating through various PANs. Various PAN means opening different entities. Like for a partnership, PAN will be different. For a person individual, PAN will be different. For a LLP, PAN will be different. It helps the individual to provide full disclosure of income to income tax authorities by paying minimal amount of tax. So now presumptive taxation. So presumptive taxation has got two main provisions. First is 44 AD and second is 44 ADA. 44 AD is applicable for individual HUF and partnerships, and it is applicable for business. It is not applicable for profession. Threshold limit for 44 AD is 2 crores or 3 crore rupees. Presumptive income will be 8% or more of gross receipts. It can be 6% if you are getting all the receipts through bank or RTGS or Google Pay. Section 44 ADA deals with individuals and partnership firms. All kind of doctors or consulting of the doctors comes under Section 44 ADA. So for this, threshold limit is 50 lakh rupees or 75 lakh rupees. If you are getting everything by check or through bank, then the limit is 75 lakh rupees, which means up to 75 lakh rupees, you can show 50% of the income as expense, and directly you can pay tax on that 50%, and then your return will be done. So effective rate in this case will be only 15% of the total income. So we have analyzed certain scenarios. So we'll go to scenario 1. So scenario 1 is Dr. Patel, a respected medical professional, received professional income of rupees 60 lakh rupees from surgical fees from various hospitals and generated an additional 60 lakh rupees from his personal OPD service at his private clinic, which includes consultation, X-ray, physiotherapy, and other miscellaneous services. However, operational expenses totaling to rupees 15 lakhs were incurred throughout the year of the clinic. So now in this case, with normal taxation, total income of Dr. Patel will be 1.20 crores, expenses 15 lakh rupees, and net taxable income is 1.05 crores, which needs tax to be paid as 33.9, which means 34 lakhs. This income tax liability will be 28.24% of the total income of the doctor. If doctor planned his income like professional fees under individual proprietorship, OPD under partnership, and in another partnership, X-ray and physiotherapy, then he can get advantage of deemed expenses, which is mentioned in the slide. So total expenses which he can claim is 77 lakh rupees. Profit will be 43 lakh rupees, and tax burden will be only 11.40 lakh rupees. So tax saving, or you can say indirect tax cash inflow, will be 22 lakh 40,000, which is a huge amount as compared to the previous payment of tax, which is 34 lakh rupees. In next example, so tax saving in this case will be 18.69% of the total income, and this 18.69% will gradually reduce if the income increases. So crux of scenario 1, effective tax on gross income of rupee 1.20 crores is 11,46,600, amounting to only rupees 9.56% of gross income. This results in tax saving of 18.69% compared to normal scenario. By fully disclosing all revenue, individuals can avoid the risk of income tax assessment and by paying just 9.56% of tax. This highlights a significant tax efficiency, allowing the individual to retain a larger portion of their income while complying with the tax regulations. And with this, you can take benefit of additional cash inflow for investment, which is nearly 22 lakh rupees per year. Now, this is scenario 2. In scenario 2, Mr. Sachin, a skilled medical professional, earns 75 lakhs annually from his services at a private hospital. Additionally, he owns a clinic offering OPD diagnostics and a medical store with a turnover of 2.25 crores. The doctor incurs expenses amounting to 60 lakhs, including depreciation. So considering this scenario, the taxation without taking advantage of presumptive taxation will be taxable income 3 crore rupees, expenses including depreciation 60 lakh rupees. So net taxable income will be 2.40, out of which the doctors need to pay 91 lakh rupees as a tax, which is 30.39%. Because of a certain limit, because of increasing income, the surcharge will increase, and because of that, the tax liability will be 30.39%. If doctor uses 44AD and 44ADA, then what he can do is, one of the option is doctor can have professional receipt as an individual receipt. Then doctor can create a partnership for OPD and diagnostics. Doctor can create a medical store. Doctor can create a partnership for a medical store. So the taxable income can be divided as 75 lakh rupees for individual. For partnership, OPD and diagnostics, 1 crore rupees. And for partnership for medical store, it will be 1.25. Expenses including depreciation. So what expense benefit or deemed expense doctor can claim is 37.50 lakh rupees for individual professional receipts and 50 lakh rupees for OPD and diagnostic receipts. So in totality, doctor can claim expense of 1.47 CR. In addition to this, doctor can take further risk and doctor can claim 44 AD for medical store. 44 AD tells us about 8% of profitability. So in that case, doctor can show expenses of 92% of 1.25. This 1.25 and doctor can show further reduced profit. But in the given example, the profit of the doctor will be 1.50 CR, tax will be only 45 lakh rupees, and tax saving will be 45 lakh. When the doctor is going to save 50% of the tax liability by creating different structures or by creating different entities and by taking advantage of deemed expense section, which is presumptive tax section 44 AD and 44 ADA. Crux of scenario 2, the effective tax on gross income of 3 CR is only 45 lakh rupees, representing only 15% of gross income, which can be reduced further. Achieving a tax saving of 15% compared to standard scenario is facilitated by bifurcating professional and business income. By fully disclosing all revenue, individuals can sidestep the risk of income tax assessment by paying a mere amount of 15% of tax. This exemplifies noteworthy tax efficiency, enabling individuals to preserve greater proportion of their income while adhering to tax laws, and which will facilitate more cash flow on yearly basis of amount equivalent to 45 lakh rupees. Now we can see scenario 3. In this scenario, Mr. Kulkarni runs a private hospital offering services such as surgical and inpatient department, consultation, OPD, diagnostics, and a medical store, with a combined gross turnover or revenue of 10 CR from clinic operation or 10 CR from the hospital. Diagnostic services and medical store, the doctor incurred expenses worth rupees 4 CR, including depreciation. In normal tax scenario, the taxable income is 10 crores, the expenses is 4, and net taxable income is 6. Tax burden will be 2.53 CR on this total income of 6 crores, which will, so after that, the cash flow from this will be nearly 3.5 CR. Again, by creating multiple entities and by recognizing multiple business lines of the hospital as a different entity, doctor can take the advantage of presumptive taxation scheme of income tax. So on the screen, you can see taxable income is 10 crores. Expenses, including depreciation, which the doctor can claim is 6.37, which may increase to 6.5 or 7. And the profit is 3.62. This profit can be further reduced with additional formations to 3 crores. The tax burden will be 1.22 crores. So tax payable on income of 6 crores is only 1.22, which will save tax of rupees 1.30 crores every year. So this is a pie chart which shows the income breakup. Total profit is 34.62%. Tax saving is 13%. 13% of 10 crores is 1.3 crores every year. 1.3 crores saving every year, which is a lot saving, or which is a huge amount of cash flow which you can utilize for investment into other securities or shares. Crux of scenario 3. The effective tax on a gross income of 10 crores is 1.22, accounting for only 12% of gross income. This results in tax saving of 13% compared to standard scenario by utilizing strategies such as bifurcating income between special purpose entities and maximizing deductions. By segregating income into special purpose entity and maximizing deductions, individual can potentially benefit from lower tax rates and reduce their overall tax burden. Full disclosure of all revenue allows individuals to avoid the risk of income tax assessment by paying a mere 12% of tax, because you are showing each and every income as income. And after that, you are claiming deduction based on presumptive taxation. So this cannot be treated as undisclosed income. This showcases significant tax efficiency, enabling individuals to retain a larger portion of their income while remaining compliant with tax laws. It underscores the importance of strategic tax planning and utilizing available tax saving opportunities to optimize tax liabilities. So tax planning steps for doctors is analyzing the current scenario. So you need to analyze the current business scenario to understand the entity and its. In this, you need to understand or analyze in the entity what all streams are giving income, and then you can bifurcate the income. Planning tax for doctors to analyzing various tax planning alternatives and selection of most beneficial alternative, creating a special purpose entity and making related changes, implementing suitable tax management scheme, and executing the plan for tax saving. So by utilizing all kind of tax provision for presumptive taxation for your own setup and bifurcating your income into either business or profession, you can save on taxes as compared to the regular taxation provisions. Thank you.
Thanks, Chinmay. So there will be certain questions also. I guess, Chintan, you can also start asking questions, and then every slide we have also noted down certain questions which we want to ask you. And I guess, Dr. Deepak, if you have also, any questions, I guess we'll just leave the floor open for Q&A.
Yes, my first question is if we create partnership firm, then also the profit from that firm will be clubbed in individual taxation, na?
No, profit from partnership firm will be clubbed in individual taxation, but profit is exempt under section 10(2)(a). So that will not be taxed in hands of individual after paying presumptive tax for partnership firm.
Okay. Right. One of the listeners, Sujata Rane, she is interested for suggestion to save the tax for salary doctors. Is there
So
any?
the suggestion is doctor can ask the organization to convert it to consulting, and then they can take the benefit of presumptive taxation, because for salary, there is no presumptive taxation schemes which are available.
Right.
In that case, Chinmay, like little bit of restructuring can be done in the salary. Like, certain NPS, some amount can be availed in the national pension scheme. where the employer can deduct and put it in the doctor's name. I guess that is not a part of the doctor's taxable salary. Plus a certain allowances also, as a salaried person, you can take, like doctors go on conferences or they need to be dressed in a certain way. So attire allowances, then helper allowances. So a certain allowances can be structured in the salary in such a way that they are allowed, as an allowance, but it is not taxable. So Chinmay, you want to just throw some light on that?
Yeah, they can take advantage of certain allowances, like you have mentioned, attire allowance or house rent allowance or NPS. But for that, their employer needs to give them a bucket, free bucket, which means that a certain part of salary is in that bucket, and employee can plan all kind of allowances, because of which he or she will get the benefit of it. But that all depends on the employer whether they are providing that bucket allowance to them.
Sure. Okay. In that first case study which you mentioned, if we can just go back to that first case study, there
Yeah.
were a certain questions in that. So I'll just, ask you a certain questions if we can just go back to the case study.
Yes. Yeah,
Nailman,
this is the one.
Nailman, please unmute yourself.
Yeah, sure.
Yeah.
Yeah, so this is what it was. So if you can just go back to the slide, next slide, where you just say that they have to restructure like the income, where you have shown the scenario. Yeah, right. So in this case, what I just wanted to ask you was that do they need to maintain like the books in all cases? And you had said that everything needs to be in check or in GPay or in the bank. Then, that deem expenses ka rules will change. So can you just throw a little light on that?
Yeah, in this case, they can take advantage of presumptive taxation for all three entities. And then for all three entities, there is no need to maintain details about expenses. Okay. Second thing is, this presumptive taxation scheme is operates differently for the SSEs where everything is through bank or through some kind of RTGS or some kind of transactions through bank. And it operates differently when some of the transactions are by bank and some of the transactions are by cash. So whenever there is 44 AD, when all the transactions are from bank, the SSE can claim 6% of gross turnover as their profit. Means if the gross turnover is 1 CR, they can show profit of only 6 lakh rupees. And they can pay tax on the same by taking advantage of 44 AD.
Okay,
But
fine.
this section is
Yeah.
not applicable for doctors for their professional fees. This section can be applicable for doctors wherever there is a medical store. So for professional fees, the section speaks about 50 lakhs or 75 lakhs, and the presumptive expense they can claim is up to 50% of the total revenue.
Okay, fine. My one question is, if in case there is one doctor who is a surgeon and he is going in different hospitals and he's getting a fee from there. As a consultant, he's getting like that surgery fees. Okay, and he
Yeah.
also has his own nursing home. Okay, which is
Mm.
in his own proprietary name. Now, in
Yeah.
case if that doctor forms a partnership, so his own hospital, he creates a partnership between himself and his spouse, or whoever, if he moves that proprietary structure of his hospital to partnership. Okay,
Mm.
and the money which he is getting as consulting fees, if that can
Mm.
also be bought into the partnership firm, like he can raise an invoice from the partnership firm for that consulting fees, then in that case a lot of income can be pooled into the partnership firm. And like you said, कि there also there is presumptive taxation. So can you just highlight this scenario?
So I think this is covered in scenario 3. Let me go to that scenario. So this is the scenario where the doctor is having uh, what you can say as receipts from all kind of hospitals. In addition to that, he is running his private clinic or private hospital. In that case, he can form different entities of different incomes, and then by creating different entities, he can claim presumptive taxation for those entities. In addition to that, he can claim presumptive taxation for all the income which he is getting from hospitals.
Right. Okay. No, in this case, say in case if he does not have a diagnostic services or medical store, he just has his hospital and he has like his income as a consultant from different hospitals. So how in this scenario, like his own hospital, like OPD income or whatever from his hospital, like right now he has in a proprietary structure. So if he moves it to a partnership, would it
So
be
ideally, it is
advantageous to him?
advisable to move to 2 to 3 partnerships for such a kind of doctor. So he can earn his consulting fees from hospitals on his individual name, and then he can create 2 to 3 partnerships for running his own setup, which is his hospital, and then he can group different incomes under that partnership depending on what kind of income he is getting. Because see, running a hospital is not a profession. Running a hospital is a business. So means what I want to say is any person who is not doctor can also run a hospital. So he can bifurcate running a hospital into 2 to 3 partnerships where he can park certain profit centers under those partnerships, because of which he can get the benefit of presumptive taxation. I mean, see, this depends on case to case basis. What kind of income he is getting from what stream, medical store, diagnostics, IPD, OPD. So this depends on case to case basis.
So in case instead of a proprietary setup, he gets his hospital income in a partnership, like in an
Yeah,
LLP.
yeah.
Then with that presumptive taxation, say if his turnover is 1 crore, then what will be the
LLP,
kind of
see,
yeah.
for LLP, presumptive taxation is not applicable.
Okay. So it needs to be a normal partnership.
Yeah, yeah.
Okay. So in case of a normal partnership, in case if his turnover is 1 crore in that entity, then what is a profit which he can show?
You can show 10 lakh rupees.
Okay. What is the allowable limit in that case?
6 lakhs or to 8 lakhs. If there is cash collection, then 8 lakhs.
Okay. So he can simply say that my profit is 8 lakhs and he can file the return.
Yeah, but I cannot comment on his profit. He can show 8 lakh rupees because in every case I need to see, or anybody needs to see, that what income is there under it. So it may be possible that there is certain income which is from profession. And if there is certain income from profession, then he needs to show 50 lakh rupees as his income. So I cannot, what I can say, comment like he should show 8 lakh rupees. That depends on what kind of income is there in this 1 crore. But
Okay.
he can show profit from 8 lakhs to 50 lakhs.
Okay, fine. Sure. Okay. Thank you so much. I
Thank
guess
you.
there are some more questions from the audience also.
Chinmay, by one more scenario, uh,
Hmm.
you mentioned all surgical and all type of doctors.
Yeah.
One doctor is having only OPD, his office, where he is consulting, only consulting patients.
Okay.
And whenever there is need of admission,
Yeah.
he he admits his patient to different hospital where he visit, and he only gets daily consulting fee, say 2,000 or 3,000 per visit.
Mm-hmm.
So how will you calculate and how will you advise this type of in this type of scenario?
See, for a doctor who is having his own OPD or consulting, and in addition to that, he is visiting faculty to various hospitals, or
Right.
he is a panel consultant to various hospitals, then in that case, if he is having a consulting plus some of the expenses of consulting,
Hmm.
and he is having income of say 30-35 lakh rupees,
Hmm.
then it is advisable to not to go for presumptive taxation and show the expenses on actual basis if they are crossing the limit of 50%.
Right.
Okay. And if his income is much more than that, then
Hmm.
he can bifurcate his OPD into a partnership, he and his wife,
Hmm.
and his consulting fees or his panel consulting fees can be treated as his individual income.
Individual. Right. Perfect. One of our participants from Andhra Pradesh, Indra
Yeah.
Reddy.
Okay.
So he is asking, so do you mean to say that it is better to have a setup with partnership for like X-ray, radiology lab, etc. in the same institute?
Yeah, see, X-ray, radiology, diagnostics, as far as my knowledge, these are the profit centers of a hospital.
Hmm.
So there is always a better chance of getting more money and saving more taxes if you separate out your hospital from the profit centers and take the profit centers under presumptive taxation.
All right. So Dr. Vibhakar, do you want to say something?
Yeah. I would like to say that I don't know whether you have been briefed that majority of the participants in this webinar would be would be having mainly only dispensing practice or dispensing plus consulting practice, or very few may be having only consulting practice, and they don't run any diagnostic center kind of facilities like x-ray and pathology lab and all that. So would you like to discuss something about these majority of the doctors who are the members of this federation or not?
So what you mean to say is majority of the doctors are having clinic plus they
Yeah.
are visiting at some
Yeah.
of the or the other hospitals, right?
Very few. Very few.
Yeah.
Basically, this is Family
So
Physician Association Federation, sir.
yes. So in that
Just
case,
1 second. Just 1 second. Huh? So Deepak ji, we have also, we discussed with Ragnesh ji, and there are several hospital owners also that
Yeah.
we have also invited because, it would also benefit them.
Hmm.
So apart from FFPAI members,
Hmm.
there are several other segments,
Hmm.
which would also fall into multiple income streams.
Hmm.
So you are
Hmm.
probably right that, majority of members are FFPAI members.
Hmm.
That is obviously true, but the diversity is also there. But
Yes. Yes.
yeah, your question is quite valid, sir. Chinmay ji, please go on.
yes. So for such a kind of setups, if your income is up to rupees 50 lakh rupees, so nowadays, to be very honest with you, not depositing the amount into bank should not be the option for anyone. So each and every rupee which you are earning should go into a bank. So what we can see is how we can reduce the taxation. So if your income is up to 50 lakh rupees and your expenses from salary or depreciation are not 25 lakhs or more than 25 lakhs, then you can go and take the advantage of Section 44 ADA. You can just show the expense of 50% of the total income, and then you can file the return. There is no need to show any other things or any details of the expenses. If your income is going above 50 lakh rupees, then you can form an additional entity like partnership for the income which is spilling over above 50 lakh rupees. And then you can take the advantage of 44AD for both the entities, your sole proprietorship plus your partnership. So I think this is what you are asking, right?
Now, would you like, Nehal ma'am, would you like to give your
Yes, yes.
Concluding remarks.
Yeah. There is one more question also which has come,
Yeah.
that how can we plan our consultation charges for IPD when one doctor has only clinic OPD?
I think that has been answered by from my question.
Okay, fine, sure.
But still, Chinmay sir want to answer.
Yeah.
So,
Chinmay, did you
can you
get my
repeat the
question?
question?
Yeah, I'll just repeat the question. Dr. Indira Reddy is asking that how can we plan our consultation charges for IPD when one doctor has only clinic OPD?
So she means to say that there is only one doctor who is running a hospital and he is having IPD as well as he is having, or he or she is having OPD in the same hospital, right?
Yes. Maybe a clinic. Yeah.
Maybe a clinic. So clinic is for OPD and there are certain IPD patients as well.
Yes.
No. I think he is asking like he is only clinic and he is also consulting other hospitals.
So I think that question we have already covered, right?
Exactly.
Yeah.
Yeah.
So, and if there are certain questions of anyone, then they can certainly reach out to us. That is not an issue. So I have shared my number over here. So, and in addition to that, Chintan is having my number and he can coordinate. So that is not an issue.
Yeah,
Sure,
sure.
sir. Definitely we'll do that.
So, thanks, Chinmay. What, point what you are trying to drive is that we don't need to shy away from reporting the income and really paying taxes. If you just
Correct.
restructure the flow of income, the cash flow, in a way that you are just structuring it either, like you said, as a consulting income, or, in a proprietary or in a partnership, just restructuring can help you really report the entire income, but that will not mean that you will pay higher taxes. By this little bit of restructuring, like you showed, in certain cases, the tax liability was down by more than 50%. And what one point which you were driving, K, we have in mind ki if we are earning 100 rupees, then our tax is 35% or 40% or 30%. That is like what we have in mind ki if we show more income, to 35% will go in tax. But like you really rightly said that with little bit of restructuring, if your gross income is 100, you can bring down by planning the effective tax between 12 to 15%. Okay, which is very beautiful. I guess 12-15% tax, nobody would mind, and you're not even doing anything, which is out of the law or out of the book. You're just restructuring your income within whatever is allowed and still bringing your effective taxation quite down. So it was quite insightful, I can say, Chinmay, that there's so many options possible to look at the income in a different way and restructuring it differently. So thanks so much for your time, and all over to you, Dr. Deepak, if you want to add something, or Dr. Vibhakar, to whatever Chinmay has spoken.
Thanks, Nayal Ben. And I request Dr. Vibhakar bhai. Hello.
Yeah.
For vote of thanks, sir, and your concluding remarks.
Yeah. Thank you, Madam Neha and Mr. Chintan. But I would like to concentrate more on the individual practitioners or maximum main doctor and spouse as to how we can plan out our tax planning so that we can our taxable income.
Yeah,
If
sure.
that
So
is
in the
possible,
coming sessions, we will also cover personal taxation. Today, we were talking at the entity level. In the subsequent sessions, we will also talk about personal taxation also for
because
a couple.
ma-
Yes,
majority of us
definitely.
were about the age of 60 when we passed out and we started practicing. Perhaps we did not have our spouse, and we don't have even partnership firms. So that situation also requires something and to be discussed and known.
Sure, sure.
But
So
you
we
can
will
you
the
can you can
subsequent.
form the partnership even as on today. That
Yeah.
partnership can be with your spouse, or that partnership can have your HUF, or that
But
partnership can have your kids.
wouldn't the partner be required to have the academic qualifications,
No.
medical qualification? I'm not talking about business. I'm talking about profession.
Even running a polyclinic or a OPD clinic, so doctor can have his OPD fees, and even clinic charges you can charge separately, and you can plan it accordingly in partnership and individual plan.
What would be the source of income as clinic income then? Because if he's not having any other services like radiology or lab or physiotherapy or some such thing, in that case, what would be the head of income?
See, facilitation charges of a polyclinic comes under business income, and doctor's charges comes under consultancy fees. So for example, per patient, if you are charging 500 rupees in totality, 300 can go towards individual doctor's charges, and 200 can be facilitation charges. And in that facilitation, you can show it as a business.
It is like the same thing that in case if I'm renting someone else's infrastructure for like consulting, then in that case, I need to pay him for the facility charges and all. So in case if it's my own center, I can differentiate between the consulting fees and between the charges for other facilities. If I get this right, Chinmay?
Right, correct.
Okay, yeah.
So,
Sure.
on behalf of the Federation of Family Physicians Association of India, I thank Madam Neha as well as Mr. Chinmay for their very innovative lecture and making us knowledgeable about this. And maybe in future we will have a little more practical utility of this when you discuss individual practitioners. Majority of us have a clinic of say 300 square feet or so, or even less than that, and majority of us run only either solo or maximum sort of partnership with our spouse. In that scenario, if you go a little bit into details of how to maintain the accounts and how to minimize the taxable income, I think more people would be benefited.
Sure. We will do a follow-on session on the same topic for the scenario which we just discussed. And like we said, this is a series. So we are talking about, we did goals, which was the first pillar. The tax and cash flow is a very detailed session, and even budgeting. Once taxation is sorted out, we can speak about cash flow and budget. So in the subsequent sessions, we will once again touch upon this topic on taxation more from individual doctor's perspective. Like today we've covered on the practice side of it, but we'll also like cover personal taxation for a doctor couple. So definitely, Dr. Vibhakar, in the subsequent sessions, we will take up these topics. And having said that, we'll also spend considerable time on how the doctor in different age groups can actually plan their investments. We'll also spend time on estate planning, writing a will and all. And last but not the least, in case if someone has taken loans and all to grow practice, then how they can really plan to be debt free. So in the subsequent series, we'll try and cover a lot more aspects of personal finance.
Even maintenance of accounts, like whether we are governed under the 3C register, this thing that we are supposed to maintain, what is the upper limit, what is the minimum limit at which you are supposed to maintain the 3C registers and things like that would be also well.
Sure. So Chinmay, we can have like Dr. Vibhakar said, a follow-on session, where more detailed about how they can go about from maintaining books to filing returns to everything for like a scenario where it's a doctor couple, more from the personal taxation angle.
Yeah, we can
Right, right.
certainly have that session. So I got the exact requirement. So what he is looking at. So in next session, we can give the solution for him so that it will be good for everyone.
Sure,
Yeah,
sure, definitely.
you may touch upon the new tax regime also vis-a-vis the old tax regime, so that in future that would be helpful too. Well, that would be mainly from the current financial year rather than the previous, but you can touch upon that also.
Yeah, sure.
So thank you, everyone.
Okay.
Thank you, everyone.
Thank you so much. Thanks.
Thanks, sir.
Thanks.
Thank you.
Thank you.